Here with us, Oliver Sloup, Blue Line Futures. Oliver, what do you think of these overnight sales? Are they enough that we've propped up this market a little bit today?
Well, it's certainly encouraging. It was the first flash sale that we've seen since December 11th, so nice to see some sales back on the books here, especially to kick the week off. And again, it is another abbreviated week, and we wouldn't be surprised to see the volume thin out. But I think large part of these sales were kind of suspected last week. There were a lot of rumors flying around that China was in the market for 3 cargoes at least of beans, and I think it's kind of one of those things where you buy the rumors, sell the fact. And that's why we're seeing this weakness in this early morning trade. On top of that, we're just in a market that's really overextended, and sure, the path of least resistance has and is still higher, but the move higher that we've seen over the last 2 weeks has been huge, and it's brought the RSI, or the relative strength index, back to levels that we haven't seen for a couple months now. For soybeans, that RSI was as high as, I think, 78 this morning. That was the highest that we saw since the end of November. And when we get that overbought, pullbacks aren't out of the question. And that pullback that we saw at the end of November, when we saw the RSI, relative strength index, at similar levels, I think was about 60 cents. So, again, the path of least resistance is still higher, but I would be cautious buying at these levels. I'd welcome a healthy pullback, a little closer to $12 to revisit that buy side.
And boy, that heavy pressure's over in the wheat market. We'll get to that in a moment. Right now, though, the corn about a penny to a quarter higher. We're March up 1 cent now at $4.52 a bushel. December is now up 1 3/4 at $4.26 1/4. On to the soybean market. We've got the January down 8 1/2, March down 7 3/4 at $12.56 3/4 after hitting an overnight high of $12.80 1/2. Wheat market, that's where the heaviest of the pressure is, I guess I should say. March Chicago down 19 1/2 at 607 1/2. March Kansas City wheat down 18 3/4. It's trading at 570 1/4. March Minneapolis wheat down 11 1/4 at 571 1/2. And the March cotton contract is up 29 points at 76.49. What about this dollar here today, Oliver? Is it a player at all? It's down just 80 points at 91.70.
It is a player, and there's an old saying, you get the dollar right, you get a lot of things right. And we've seen that play out over the last several months. With a weaker dollar, you've seen a bid in a lot of commodities, including the agricultural markets. But look outside of that, you've also seen a little bit of a bid in the energy sector as well as precious metals, too. Now, I wouldn't look at the dollar to have a 1-to-1 correlation on any given day. It's the trend of the correlation. The weaker dollar is positive for commodities, but we're not really seeing that play out today, and that's okay. You can have one-off days here and there. Wheat, I think, just under a lot of pressure in an adequately supplied market. We've got some better weather forecasts coming in. You're just seeing some long liquidation here before the end of the year. $6 is going to be psychologically significant. It's also kind of the middle of the range that we've been in here over the last couple months. A break and close below there, I think, could accelerate the pressure, but time will tell.